Do you know the percent chance you'll pass an eval? Do you know the percent chance you'll get that payout? What are the odds? If you don't know the odds, you're doing something wrong. You've taken a misstep somewhere. You haven't done something right, because you should have the data to back up what the odds of you passing are. You shouldn't be putting money into this if you don't have a rough idea of the chances of passing. Now, if you don't do this and you're going in blind and you trust your model and you've backtested your model a little bit and it works kind of and you understand it, you're going to have anxiety. Now, I'm not trying to teach you. I'm trying to tell you a story from my trading and how I fixed it. Is I've had a lot of anxiety and lack of faith, really, and fear and FOMO of missing trades and over leveraging, and like, what if I don't pass this account? I really need to pass this account. This is my I just put like 5 accounts on the credit card, and I blew them, and then I bought a 6, and now I'm just riddled with anxiety. And all of these trades, I'm anxious. But how did I fix that? Why am I not anxious anymore? Well, it's because I collected the data on the backtest. When I started collecting the data on the backtest, that's when my anxiety really got curbed. My fear of missing out, my impulsiveness, it really went away. Not just, maybe I'll make a separate video about an objective model, but really just really getting to know your model intimately, very specific. You should know all of the stats to your model. Now, I'm just going to stop rambling and show you. So this is my stats right now for my model. Only 65 trades, which isn't a lot. Most people have 0. Okay, 65 isn't a lot. I understand. Most people have 0. So this is the main thing I wanted to talk about in the video, is you should have a rough idea. I have a 52% win rate. I have a fixed 1.95 R because I use limit orders and I target the same amount of points and I have the same size stop. So that means my risk is always the same. So my RR is fixed, my risk is fixed, and the win rate is the only changing variable. Right now it's 52%. That could be wrong. 65 trades isn't a lot. I understand. It could go down by a lot. But let's just say... let's go to the next part. This is what really helped me, is a Monte Carlo simulation. So we have Monte Carlo. So we have I use Switch Markets because I don't know, I just like it. And I got all of this from NBB Trader. His name's Omar on X on YouTube. I'm sharing the video. I'll put the link in the description. This is the video that I got it from, and this is me summarizing and how I've implemented it into my trading because I found it very insightful. So what this does is it'll tell you the maximum, kind of the odds of blowing your account with your strategy, and really the chances of you getting a payout. So you can change your risk parameters according to that, and you'll know the best and worst outcomes, so your anxiety will leave because you already know statistically what's likely to happen within your account equity curve. So I have a 52% win rate, okay? It's 65 trades, so we're going to round down by 7%, which is a lot. You have to be very accurate. If you don't have at least 50 trades of data, don't even think about doing this. If you have 50, round down by like 5 to 10%. Ideally, you want like 1 to 300 trades. The more, the better, right? So I'm still collecting data. Maybe I'll do an update later when I get to 300 and see how the stats vary and if I was completely wrong about the estimation. But I'm going to round down to 45%. Instead of 52, I'm going to drop 7% because I don't have enough data yet. My average risk to reward, it's a fixed 1.95, so not 2, but maybe I could cut my stop loss later because it's like if it gets that close, you know what I mean? You can do the math later on. That's why it's good to collect data too. Maybe I could drop the stop by 30%, up my RR to 2.2, and it doesn't affect the win rate at all, right? So that's why data. You could do this automatically through a quant, but I feel like then you lose the whole aspect of like the trading edges. Partially in your discretion and experience. It's not just the model. It's partially your experience and discretion. So that's why you got to collect the data, collect the trades in a real backtest. I love FX Replay. And the thing about RR is you see people all of the time on the internet, and they have like a 5R average, 4R average, 10R. Some people have like a 60, you see. And the win rate needed for the RR is, we'll look this up right now. Rate needed for RR. Percent graph. The win rate needed for your RR changes drastically, right? So a 1-to-1, you need a 60%-ish, right? 50 is break even, so you need about a 60% win rate to be profitable. 1-to-2, you only need about a 40%. And this is good money. This isn't like, oh, you're just getting by. Like a 40% win rate with the 2R is insanely profitable. You're going to be good for life with that if you can just get that. 1.3, you need 30%. 1.4, 30%. 1.5, 20%. And it drops off a cliff after that, because 1-to-10R, I mean, think of the stats. Your win rate is in the gutter. It's in the gutter. So yes, it's possible to have high R, but the prop firms will kind of punish you, because I'm assuming you're trading prop firms. They will punish you for having a high R, low win rate, because you're forced to trade so heavy, and you have these renewing time limits, and really you're trying to risk heavy. So what the ideal scenario for a prop firm is to have a 1-to-2R, maybe 1.5R, with a 40 to 50% win rate. That is the golden area where you want to be, especially for prop firms, because they will punish you so heavily for having a low win rate, because you'll blow the account before you even get past the combine challenge. And then the toll on your mental, especially if you're a beginner with a 20-30% win rate. Actually think about that. You take 2 trades a week, and you have a 20% win rate, meaning you could have one winning that, statistically speaking, you'll probably take 8 trades, 20% win rate. So you'll probably win 1 to 2 trades per month. Think about that. Can you handle that? Most people can't. I can't. Most people can't. So if you're really like logically looking at this, you go, wow, I don't actually want this 6R crazy tech standard deviation OTE, because it's not sustainable. You can't scale with it, right? Simplicity scales. And that's what I found out. That's what I've learned. That's what I'm trying to improve on and collect the data for, so I can more accurately check this out. So along with the mental and the prop firms, it's also just not likely that the market moves that much in a single session. Like if you're thinking about like you have a 1-to-5R, how many times can you have a safe stop loss and the market moves 5 times your entry without coming back? The markets are very they reverse a lot, right? The 3 months at the beginning of the year of 2026, we just consolidated, right? How many days are you going to wake up, especially if you're a scalper NQ, and it just, you have a safe stop loss and it moves 5 times where you entered? That shit doesn't happen, dog. Also, another thing, on average you win like 1 to 2 trades per month with that 20% win rate. I don't go out of focus. How many times? This is what we're gonna do in the Monte Carlo situation, but actually let's do it real quick. You have a 20% win rate, and you average you have a 30% win rate with 1-to-3R. 25 realistically with a 3R. Risk per trade 1%. Max drawdown 40. We're gonna assume it's just a 50K number of trades. You have nearly a 100% chance of blowing the account in 100 trades. But let's say you cut the risk, right? Still pretty high. So you're now, instead of risking 500, you're risking 250. Okay, still 100% chance. Okay, maybe you're risking 125 per trade. Now it's a 50-50, you blow the account, or really a 60-40. Let me even bump the win rate up a little bit. Now you have a 25% chance of blowing the account. Okay, that works, right? The average, you're profitable a little bit, barely. Oops. Yeah, same thing. But it's just not as profitable. I mean, technically, if you have like a better win rate, it's so much harder to have a high R and a low win rate on so many different levels and so many different categories. It's just almost pointless. You could take the same strategy, same setup, same fill, and you go for a 2.5 over a 1.5, your win rate, objectively, that would probably be worse because of your win rate getting hit. So the ideal range is 1-to-2R. I have a 1.95 on average. My win rate is 53, but we're rounding down because I don't have a large sample size to 45. Sorry, I just felt like I have to throw up. Max drawdown 4%. How much are we risking for a trade? We're going to be risking 1%. How many trades does it take to pass? If you're averaging 2R with a 45% win rate, you want to pass an eval, you need 3,000. So what would that be? Roughly 3 trades to pass an account, right? Oh, oops. 1% per trade, risking 500 for 1,000. You would need 3 things to pass. Number of trades 3. As you get more trades in, this is why you want to do like a low risk, like 1 to 4% on live accounts, because as the more trades you take, the chance of you having a losing streak, like this string of like anomalies of losers, exponentially goes up, right? It multiplies. So, right, you think like, oh, well, what are the odds of that happening? They're low. They're low that you have a crazy losing streak, but it's possible. And as you trade more, the possibility of you going on that losing streak gets better. That's why you need a really big sample size. So, realistically, high risk on these prop firms is ideal because there's a very good chance, if you have a good win rate, good RR, that you will not blow an account if you just follow your rules. And this removes the anxiety from your trading. This is what will help your mental tenfold. I don't mean 10 times, tenfold, right? To the power of 10, it'll help your trading and your psychology. So let's calculate. Okay, we need 3 trades to pass. Or actually, what are the odds you're going to win 3 in a row? They're low, right? So let's say you need 6 trades to pass. Because you're going to lose some, and then you got to win some, and then, you know what I mean? So 6. We could even do, let's do 8. Let's do 8. That's so rare, but let's just say 8, right? So I nuked my win rate. I upped the number of trades I took because what if it just takes a long time to pass? I'm unlucky. You can calculate. You see, it's a little bit different because it runs like a unique string of these numbers together. But roughly, it's what, 17%. You could round. It's like 15, 16. We could round up to 17. 17% chance. What's needed to pass an eval? 53K, right? Scramble it around. Sometimes you're nowhere close. Sometimes you're breaking it, right? And as the trades go on, or scrap that part, but really the point is you can get the chance of blowing your account right here. So what's the account size? $50,000. The max drawdown, 4%. Number, right? You know, whatever, you put in all the stats. So this is what it would take to blow an account, and you need to make 53K or 3K, 6% of this to pass the account. So what are the odds that within about 8 trades, you blow the account? So this is up to you. I'm sorry, this is like not a structured video at all. So what are the odds you blow the account? It's about 17%, roughly. So you have an 83% chance at passing. Are you willing to put $100 on the line to buy this eval to have a 83% chance of passing? Okay, so what are the odds off rip? So if you take $100 and then you pass. Okay, so let's say it takes 8 trades to pass. Boom, whatever. So you have, let's write this down because I'm losing my train of thought. 83% chance of passing with $100 account. So you spend $1,000, you're gonna have 8 accounts, 2 of them are blown, roughly. Okay? Now, let's say it takes 8 trades to pass the account. Now, because you're on a funded, you're gonna cut the risk to $250 a trade, going for $500. You know, whatever. And you need to make 5 winning days. How long would it take to take 5 winning days and make a good profit? Let's say 10 trades. Let's say 15. Let's say, fuck, I wanted to get a high number. Let's say it takes you 30 trades in a row with 0.5 risk. So $250 a trade, you're making double the money. I nuked my win rate, $500 a trade, 30 trades. You have a 90% chance of getting a payout. So let's write this down. 8 out of 10 accounts passed for 1,000. Boom. Okay, now you have what was it? I think it was an 89, so we can just say 90 because I did 30 trades. It's never going to take that much. We're going to do 15. We're going to do 15. So let's just say roughly you have a 95% chance of collecting a payout. Because what do you need for a payout? Usually you need a buffer of 2,000, or you just need 5 winning days and a profit on your account. So within, let's calculate it real quick, 15 trades, on average, you'll have about 3K profit. Let's just run it a few times. That one you're only going to make $300 payout. That one you'd have a $1,500 payout. This one you wouldn't be able to take a payout yet. You'd have to keep trading, but you didn't blow the account. This one you have to keep trading, right? And this is the average scenario, not the best, because the best you could have like a 10K month. Average scenario, 1K payout, about a, what was that, $1,700 payout, $300 payout, $300 payout, right? $2,200 payout, right? So on average, 90% of the time, 95% of the time, you're not going to blow the account, right? That's the chance of you blowing the account in those trades. Practically zero. The chances of you getting to a payout, we can keep running this calculation. You can just read it yourself. $500 payout, $300 payout. The chances are you're going to get a payout, right? $300, $1,000 times 5 accounts, times 20 accounts, 30, 40, right? There's no limit on accounts for prop firms, right? So running this, imagine knowing all of these stats, and you say you stay here for an hour. Say you have 200 trades of data that you got yourself, so you know it's legit, right? And you go, this is possible. The markets don't change that much. Like, I just got to keep doing this. It's so possible. This helped my trading a lot. This changed my trading. It's insane. Now, let's do it with let's just assume I have the results I have right now. I'm on 3 evals right now, and I'm risking 1%. So I'm risking, right? I'm risking 440 a trade to make 880 a trade, roughly, right? Because it's a 1.95R, not 2R. So this is right now. I'm trying to, let's say it takes 8 trades to pass these 3 accounts. There's a 94% chance I'm not going to blow these accounts within the next, let's just do 10 trades. There's about a 90% chance I won't blow these accounts, and I'll pass them, which I'm willing to put up $300 if I have a 90% chance of winning, right? I'm comfortable with that. You might not be comfortable. You have to risk less on an eval. You might say, that ain't shit, Chris. As long as it's 50-50, I'm cool, right? It's up to you. This is your risk tolerance. This one's up to you. This is part of your personality. But on average here, within about 10 trades, let's see the average, right? I passed the first one, passed the second one, passed the third one. Did not pass it, right? Because I'm going off average. Best, obviously, there's best and worst, but you want to look at the average, right? This one, I'm in a little bit of drawdown, but I'm nothing too crazy, right? Past that one, past that one, past that. You get the idea, right? Within 10 trades, I have a 90% chance of passing these 3 evals. Now, once I get to the account, I'm going to build a buffer of 2,000. So instead of these 10 trades to pass with 3K, I'm only gonna do. I could probably do it in 8 trades. I can make a $2,000 buffer, right? So the chance that you what this is calculating, the chance that you're gonna go on a big string of losing streaks, because this right here is profitable. Overall, 1,000,000 trades, dude, you're profitable. You're good. But what you can do is you can really kind of bullet that risk in, because if you risk like 1 micro, you're never blowing these accounts and you're profitable. But if you really want to bullet the risk in and be optimal and pass these things and build that buffer and get the payout and just make it work, you can go heavy with the risk. If you are a risk taker, you can do this. Risking 1% is a lot. If you have 4%, what you're essentially doing, it says 1% risk, 4% max drawdown. What you're essentially doing is you're taking a $2,000 live account and risking 25%. That's what you're really doing, okay? So that's why you're playing like a ballsy game, but it'll work. Now, if I'm within 8 trades with my risk, with my win rate, with whatever, actually let's drop it again, because fuck it, right? I didn't make a buffer there, didn't make a buffer there, didn't make a buffer there, almost made the buffer there, right? Not really a buffer. So we're actually going to up the trade amount to about 12. Didn't make a buffer. Didn't really make a buffer. Made a buffer. Made a buffer. Buffer, right? Almost there, right? You get the idea. You get the picture. So that now with this nuked win rate, Now I'm gonna collect more data, so maybe I'll change my risk if it's actually my win rate lowers, right? Turns out 300 trades later, I'm at a 40% win rate. That would completely change my risk profile. But right now, I'm assuming it's about like a high 40s, mid 40s, even though it says 53. I'm rounding down to be cautious. You want to always do that. And you're able to form fit your risk in a very comfortable manner where you can go like, I'm comfortable with putting on $400 on a trade. I could never do that before and not freak the fuck out after. I'm completely fine with it because I know in the long run my equity curve will be positive because the high R eats away the losses, right? When I lose, I could lose twice in a row. One win eats the loss. So that's why I'm so confident, and my anxiety is practically gone in trading. It's beautiful. Almost got a buffer. I wish it was just best case scenario every time. Don't we all? So yeah, I mean, I think that's basically the video. I can't think of what else to do. I don't know. Let me think about it for a second. Oh, yeah. Well, okay. So, anyway, this is my buffer made. High risk. So, 90% chance I pass the account. 75% chance, depending on the win rate, about a 75 to 90% chance I will pass these 3 accounts and make a buffer. I'm fine with those odds. Now, once I get on the accounts, I'm going to set the risk to at least half that, right? Like 220. So now look at this. This is so I'm on Tradeify select accounts. So what that means is once I pass the accounts, build a buffer, I can now take daily payouts, right? And this is important because I can now risk low across these 3 accounts, split my risk up, and essentially no chance of blowing the accounts ever with daily payouts. So let's up it to 50. 100. Right, and again, as you up the trades, the higher chance there is that you will have a crazy losing streak. So the average, let's calculate it a few more times. Let's see it. And actually, let's do. It takes me about 6 months to do 50 trades in the back test, roughly. So this will be like half a year of profit per account. On average, it could 22% chance that I could blow these up. So we could actually cut the risk even more. Looking at this, right? This is like your average year. Look at this power 3 number. This is your average year. 6,000 per account. That's nothing. Okay, boom. 8,000, that's nothing. 6,000, that's nothing, right? Let's do it a few more times. Kind of dragging the video, but I just want to show something, right? Like realistic expectations, right? It's only a few thousand for the year per account on average. Like now your best case scenario it could be so much better. Average risking like about 1 micro over the year. You're going to make about, let's say $6,000 on average. That's not enough to support your life. Okay, but now do it times 30 accounts, right? And essentially you're never going to blow these accounts. You made $180,000. What can you do with $180,000? Trading takes time, right? It's about building wealth. It's not like this get rich quick. It's not like that. You can take that $180,000. Oops. Put it in a live account. Maybe you put $100,000 in a live account. Now you don't have to deal with prop firm rules. And your max drawdown is 100%. Your max drawdown is no longer 4%, it's 100%. Right? So now you've just made that's not a lot of money actually. Let's cut the risk to 0.5% per trade. It's actually pretty shit money. So maybe don't do that. Stick with prop firms. Heavy risk. But you have no chance of blowing the account, is all. And, you can take as many trades as you want. 1,000 trades. Oops. Oh, I broke it. The idea is that, like, you'll never blow the account doing that, and you'll be able to scale it indefinitely. wasn't a lot of money. So maybe you want to get up like $500,000, and essentially you can live off that for the rest of your life. That's the idea. All right, you can multiply your money. You can make all this stuff happen. I don't know. It's just not really impressive. I can't even lie. That shit's like not impressive. Okay, you know what? Here, I fixed it. I understand the problem. Hold on. Oh, we're playing with it. We can really up the risk. Okay, the risk of ruin here. We didn't even go over this. That's the chance of you blowing the account. Let's say for an average year, you don't want to blow your account. You're comfortable losing 20% in a year. So let's drop it there. Risk of ruin 1%. 0.04. Here, trying to pick a nice one. Now I'm just playing with the number. This isn't even like an educational video anymore. This is just playing with the numbers. Number of trades. Let's do 1,000. So I think you need like another calculator to really look at this. But I guess at the end of the day, 2% chance of hitting 30% in a year. The stock market on average, you'll go up 70% of the time. It'll go up 10%, 3% of the time, 30% of the time, it'll go down 10%. So it's like, it's one of those things. It's like maybe you lose a year, maybe you have a losing year. But on average, most of the time, like 99 out of 100 years, you're going to be making money on the stock market. You're going to be making a few $100,000 with this level of trading. If you want to risk the entire account, which that's a really personal decision, but essentially, if you don't care about max drawdown and you're willing to put the entire account on the line and risk something heavy like 10%, maybe 15%, you know, you're young, you're ambitious, you have the potential to make a lot of money here. Okay, that's what I was kind of like getting tripped up about. I haven't done like the live account calculations. You have a 0.008 of losing all of your money. Wait, let's actually, can we make it 0? Okay, you risk 13%. This is fine. Your average is going to be $300 million, right? So if you do a heavy risk profile, so 10% isn't going to be the same. It's not going to be, 10% isn't, of course, 10,000 every trade. It's going to be 10%. You make 110,000 and now it's like 11,000, right? So it exponentially grows over time. So this would be like a year, right? Like you have the potential to make a lot of money trading. It's probably not going to be this. Yeah, see, the average changes a lot. Let's up the trade size actually. So the best is making it look small, but you can see the average is like, look at that. So you have the potential to make like a few $100,000 a year with that capital that you've raised from the prop firms. And now there's no prop firm rules. Nobody's going to take it for you. There's no winning days. So that's the goal. Pile up a bunch of capital. Ideally, I guess, and I'm learning as I'm doing this. I'm not teaching you guys. I don't have this. Ideally, I guess I'm going to be risking like 5 to 10% instead of 1% on the account because I still have a risk of ruin of 0.04. Over 1,000 trades, maybe. Right, I want to make that 0. So 10% per trade, still a crazy average return on the year. So that's the video. I learned some things too with the live accounts. You know, I'm kind of getting excited now. Like, oh, there's a lot of potential with these accounts. So this changed my trading. I'm going to collect more data, and I strongly advise you guys to go and collect data because this will change your trading. Not because, not because I told you so, but because it'll like help your psychology wise, right? You might think, oh, this isn't really important because I've made payouts. This is my thing. I've made payouts. I promise you this helps. This helps with your, I've been doing this for 2 years. You're going to think like, oh, I have a good mentor. I can make my own mentor. Dude, I've been doing this for 2 years. I've made thousands of dollars in payouts. And that doesn't give me the confidence to trade with no anxiety. This gave me the confidence to trade with no anxiety. So please try this. Minimum 100 trades. Don't even think about doing this other 100 trades. I'm going to remake this video again with an update. You want 300 to 500 to 1,000. You do 10. Listen, that sounds like a lot. You do 10 trades a day. That'll take you like 30 minutes, 40 minutes. 300 trades a month. It takes you Matt, you've been trading for probably a year, right? I'm assuming you've been trading for a year. Take 3 months. 10, and you'll have 1,000 trade. You'll have a completely accurate Monte Carlo simulation to see the results. Imagine that'll set you up for like the rest of your life. Just do 10 FX replay trades per day. That's the video. It's already getting long. Good luck and good trading.